Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. Yesterday, concerning data was released from the US GDP for Q1, contracted by 0.5% compared to the expected minus 0.2%. Core personal consumption expenditures (PCE) inflation for the same period rose from 2.6% to 3.5%, versus forecast of 3.4%. Real consumer spending increased only 0.5% against a forecast of 1.2%, and corporate profit declined by 3.3%. Undoubtedly, the Federal Reserve will consider these data when adjusting monetary policy. As a result, investors have increased the probability of a rate cut at the July meeting to 21% and the September meeting from 65% to 70% in a single day. The euro rose by 41 pips, but the S&P 500 also gained 0.8%, reflecting a sustained appetite for risk. This morning, S&P 500 futures hit a new all-time high, as it's time for markets to consider a reversal. On the weekly chart, the euro is approaching the upper boundary of the price channel, 1.1120. The Marlin oscillator now shows that hitting his target will not break the developing bearish divergence. Next week will be crucial in this regard. On the daily chart, the price is trying to hold above the 1.1692 level, but the Marlin oscillator is slightly turning downward, which does not support this movement. The main support is the MACD line. It's a blue line on a graphic at 1.1590. A firm move below this line would signal a medium-term downward reversal. On the 4-hour chart, support from the MACD indicator line coincides with the support from the higher time frame, 1590, which keeps the bullish positions relatively firm. The Marlin oscillator is ready to turn upward, and the price is rebounding from the 1.1692 level. However, today is Friday, which may lead to weekly profit taking, so we do not expect the day to close with a wide bullish candle. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of GBPUSD over the last 5 trading days stands at 113 pips, which is considered as moderate for this pair. Therefore, on Friday, June 27, we expect movement within the range between 1.3645 level and 1.3871. Long-term regression channel is directed upward, indicating a clear uptrend. The CCI indicator dipped into the oversold zone, which ultimately triggered the resumption of the bullish trend. The GBPUSD currency pair maintains a bullish trend and has completed another minor correction. In the medium term, Trump's policies will likely continue putting pressure on the dollar. Thus, long positions with targets at 1.3794, it's a thin blue line on a graphic, and 3871, it's a red line on a graphic, remain relevant as long as the price stays above the moving average line. It's a sine line on a graphic. If the price moves below the moving average line, small short positions with targets at 1.3590. It's a thin red line on the chart, and 1.3489. It's a thin green line on the chart, may be considered. However, as before, we don't expect a strong dollar rally. The US currency may occasionally experience corrections, but a sustained recovery would require real signs that the global trade war is ending. That's all for today. Wish you best of luck.